So we're all here, ready to go. Okay.
We're live. Yay.
Hey, everybody. I want to welcome you out. We have a good class today. Steve is one of the best. Let's go ahead and read a legal disclaimer because I know that's what you came here for. Today's demonstration is designed to instruct you on using Metastock and the company's software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So, I mean, today really the goal is to provide you with some good education. Use it at your own risk. So there you go. Our guest today is Steve Bigelow. Steve is a friend of mine, a mentor. I run his scans almost every day to find Doji best friends, which is one of my best pattern or my favorite patterns. He's been a great business partner with us for, I think, about a decade or so now. Steve can correct me on
least.
That.
Yep.
Yeah, and he also provided all the intellectuals for one of our most popular add-ons, the Steve Bigelow Candle Profit Systems. I could gush on for a few hours about how much I love this man right here, but that's not what you came here for either. Steve, let's go ahead and get you going. How are you doing today, Steve?
Doing good. It's been a tremendously profitable market, even though the market itself. Let's show my screen.
Okay.
Can you?
Perfect.
Okay, good. Did it right.
First try. Yeah, first try. I'm going to get out of the way. I'm going to mute myself. I'm going to turn off my picture, and you've got the floor.
All right. Well, thank you. Thank you for letting me be here today. The reason I had called Jeff a week or so ago to suggest doing a session because I've been getting a lot of feedback from people, especially in our chat room, that we're just hitting some extremely profitable trades. And was there any trick to it? And really there isn't. So these are what I call the power trade breakouts. And the reason that we're showing this today is not because we're any great stock pickers, but there's just some common sense elements that you can put into the graphics of candlesticks that allow you to identify where the high profit trade setups are about ready to occur. So don't be afraid to ask questions as we go through this. And let's see. So this is what we're going to be looking at, identifying the powerful trade setups. Now, the first thing we want to recognize is the nature of this market. And when I say the nature of this market, there is what I call the GameStop syndrome right now. People do not want to be left behind on the big price moves. So what we have developed in our on our website or in our chat room is what I call the rare package. Now, right now, the two strong sectors are biotechs and electric vehicles. I've just written a 12-page ebook on why the electric vehicle sector is going to be strong, not only for the next year, but probably the next few years. So how do we identify which ones are going to be the strongest in that sector? And the problem with that is technology is moving so fast that somebody's new technology can kind of diminish another whole area of that sector. So that's what we are calling the rare research, meaning research analysis, reverse engineering. that whenever we see a big price move or a candlestick breakout, it used to be, I would tell people, you don't have to know the fundamentals because the fundamentals are already built into the candlestick chart. That is the decision of everybody's fundamental research. Except now we're flipping that around, that there is so much new technology occurring in the electric vehicle area and the biotech area that as soon as something breaks out, we want to do reverse engineering. We want to go back and investigate what that product is or what that new innovation is and see how it's going to affect that stock for the future, whether it's just a one-time pop or whether it's going to be a long-term situation. So we've been in situations like this. This is our bragging one right now. I say right now. I was pointing out, and I pointed this out to my biggest skeptic, which is my brother. And he said, well, how do we find the good trades? And I said, on this day right here, I said, what we have built into candlestick charts is the fact that there's a change of investor sentiment. So I think OCGN, which I'd never heard of before and didn't even know what it did, but it popped up, and I asked the chat room, said, anybody know what this company does? And they said, oh, they've got COVID vaccines approved in India, and they're getting it approved over here in the US. So I said to my brother, so this is one of those that you could be buying on the speculation that long-term it's got a big upside. Well, as we were talking, little did I know, they bought stock at 73 cents. We sold it out a couple of days ago, starting at 17.73, some at 11. So he made a huge profit. Not that I'm pointing this out to say, oh yeah, we did great. Pointing it out because this was the information we were looking for. And then this was the information we were looking for. You can see the little doji best friend gap up. That told us something new was happening. So all we did was do reverse engineering and found out that they had done a partnership with a Indian biotech company. Well, that stock ran from around 2 up here to the $18 range. Now, does this happen every day? Definitely not. But this is the whole point of candlestick analysis. It puts you in situations where the probabilities of being in this type of situation is extremely strong. So you can see what happened yesterday. I think it was yesterday. What is today? Yesterday, after we took some profits up here, it opened down here. That's called a bearish harami, one of the 12 major signals. And we closed out the complete position today because it was trading lower. What do we know about a bearish harami? Tells you the buying has stopped. We're still watching to see if it's time to get back in. So this is nothing more than seeing where the breakout occurred, where there's a change of investor sentiment, and what the investor sentiment is doing. I'm still at work. Is this being? Yes, it's being recorded. So again, this is only to point out that had no idea what this company did. All we knew was that something new happened, and when we did the reverse engineering, it looked like it had a lot more upside. The same thing, whoops, that's the same one. This one was up 62% that one day, and then it was up another. It closed up here. It closed at 525, closed at 861 after hours, and then went as high as 18 the next day. So this is not rocket science. Look at our fry pan bottom and the breakout. What this basically tells us is something new is happening right here. This came from 740 and topped out up here at around the 28.75. So up until that point, had no idea what this company did, but we could go back and whatever news this was told us that there might be more upside. But the important factor was we know the results coming out of a fry pan bottom. Big upside potential. Does it all happen in one day? Definitely not. But it puts you in a situation where you're now buying things that have that potential. Now, I don't know whether I've got it in here But here's another one. This is, oh, so what we've done, this is right now in our chat room, we have developed what we call the RARE, research analysis, reverse engineering, that when we see a pop like this, we can immediately analyze or see what the news was that might create more upside. A lot of people in the room have been trading this one, and remember our T-line rule. You can stay in this as long as it stays above the T-line. There was the alert on Lizzie. So again, this is not anything that, oh, you're picking great stocks. It's just saying, whoops, something's happening here. Let's see what's happening. And it's putting us in positions where the profitability is extremely strong. Now, part of, again, the market nature is the fact that they are, everybody's kind of worried about the Robin Hood syndrome of being missing out. If something's starting to move, that people are starting to jump in because they're not sure what's happening, but they want to make sure they're not missing out on big trades. So the nature of the market right now is when something is breaking out, it is getting a lot of strength. That's also a function of the fact that this market has been in a slow, steady uptrend, and there isn't a lot of selling fear. Now, there isn't a lot of exuberance either because there's been a lot of backing filling. But when a breakout occurs, it doesn't have that overhanging stigma that there might be some selling coming in because everybody feels pretty confident that there's no sellers right now. Until today, there might have been a crack in the armor today. So the T-line, remember, this is one of the most important technical indicators used with candlestick signals. The T-line is the 8 exponential moving average. It has Fibonacci characteristics. So this statement is what has made me a ton of money. I've made good money with candlesticks, but when we started applying the T-line to our chart, started making big money with candlesticks. The T-line acts like a natural support and resistance level of human nature. Again, that Fibonacci characteristic. So when you look at candlestick charts, which are the graphic depiction of investor sentiment, and you've got the T-line, which acts like a natural support and resistance level of human nature, you've got an extremely powerful combination. Remember, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And we've got a very clear graphic illustration of what happens in investor sentiment. So for those of you that haven't seen my presentations before, very simple. The 200 and the 50-day simple moving averages are on our charts because every major money manager around the world uses those to make their decisions. All we're looking at is what their decisions are at those levels. The T-line, the 8 exponential moving average, very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. Works the same way on the sell side. If you see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. So anytime I'm in a trend and I see sell signals, but if they can't sell it to sell signals and a close below the T-line, you can stay long. Now, there's a caveat to that rule, which is basically the further away you move from the T-line, the higher the probability it's going to come back and test it. So as you can see, there's a couple elements right here that tells us when it's time to take profits. One, we see a long-legged doji, lots of indecision in the overbought area. And look how far away it is from the T-line. And what's our doji rule? Very simple. The Japanese rice traders tell us if it opens lower the next day, you close it immediately. Where do you think the first target's going to be? Back to the T-line. So here was a rare analysis. A couple weeks ago, the Biden administration said that by, 2025, all their vehicles, government vehicles, are going to be electric vehicles. Workhorse took off like a scalded dog. It gapped up, and then you just stay long until you see a sell signal and a close below the T line. So anytime we see these pattern breakouts, we can go back and do the research. What moved it? Well, this one's in the electric vehicle area. Whatever this announcement was on this day told us there's probably more upside. As you can see, it was up 48% on that day. So again, I don't want to be pointing out, we've made huge profits because we're good stock pickers. No, we're just putting ourselves in pattern breakouts, then researching why that pattern breakout occurred, and it's given us high probabilities of being in the right place at the right time. These breakouts are telling us something. It just, again, there's our best friend signal. It's just telling us there's lots of activity coming into, or a lot of bullish investor sentiment based upon the pattern setup. We might not know why it's happening until we research it. We just know it's happening, and this is the graphic depiction of human nature. Let's see. So here's the patterns that have been working extremely well. Look at our scoop pattern. A lot of people in the chat room have been in this one. And how long do they hold on to it? Until you see a sell signal and a close below the T line, with the caveat of the simple, I guess, advisement from the Japanese rice traders. Where do most people buy? They buy exuberantly at the top. Look what's happening. They gapped it up, and they were starting to move away from the T line with big, powerful moves. What's that tell us? We want to start getting ready to take profits. But here's what I call 2+2 analysis. Look at our little buy signals here. And then this is a doji sandwich. Very simple. You see a bullish day, and then you see a doji the next day. What's our doji rule? Price is usually going to move in the direction of how they open after a doji. They open positive. We've got a good probability they're going to trade positive with the doji sandwiched in between two big candles. And what can we identify as far as our pattern? Well, we can see the flat handle. We can see the scoop setting up, and we know the results of a scoop pattern, a slingshot effect to the upside. So whenever we see something like this, we recommended Life the other day because it was coming out of a scoop pattern. It took off big time. So anytime we see something like this, where you can see the pattern and you can see a gap up, it tells you there's been a major change of investor sentiment. So this is, again, taking advantage of what the nature of the market is right now, that when things start moving, everybody's jumping in. I say everybody's jumping in. There are specific sectors, especially the biotechs and especially the electric vehicle sector. Now, the electric vehicle sector is starting to take a little bit of a rest. But after the rest, there's going to be more announcements of technology improvements. And when I say technology improvements, the things that have brought the electric vehicle sector to light is obviously Tesla. And just to regress here a little bit on a fundamental analysis, 2 years ago, Tesla was touting that he was going to produce electric cars, which seemed a little bit on the fringe. You could only go 120 miles with it. So your problem was if you worked 62.5 miles away from the house, you were out of luck. Well, now the technology has moved where their electric batteries can go 420 miles on a charge. And they've both recently, I say both, Tesla and NIO have reported that their batteries now are going to be moving up to 620 miles per charge. Now, what that does is it affects some other parts of the electric vehicle sector, like the charging stations. If you don't have to charge your car or your vehicle once every 600 miles, which obviously most people don't drive 600 miles in a day. It's going to be now charging stations might be oriented more toward the long haul driver and or the emergency where you forgot to charge your car over the last couple of days. So one technology improvement will dramatically affect other areas. Now I've gotten way off track, but because we anticipate that the electric vehicle sector is probably going to be strong. Right now, there's only about 1% of all cars are electric. That's just over the past couple of years. And the next year it could be 2%. And with Ford and GM starting to get into the business, it wouldn't be unusual to see a major percentage of cars going electric. So that whole sector is going to be extremely strong. Not only just the manufacturers, but the suppliers, lithium battery producers, lithium mining companies, all the things associated with that sector. I'm trying to make sure I'm not going too fast. Are there any questions out there that I can answer as we go along? As I say, don't be afraid to ask, as I'm
we've had a couple in YouTube. We clarified, but we've been able to answer them because we're helpful. Tom Jones wanted us to clarify the T line. We told him it was the 8 exponential moving average. He then asked if what the smaller, shorter time frame was. It's the 3 EMA, and we told him that it was what you would use if stocks were moving parabolic and you wanted a tighter stop. And those are typically the questions. Rob wanted to make sure he could review the recording later, and we told him yes, we'll send him the link if he's in GoToWebinar. If you're in YouTube, this question also came up in YouTube. Just watch it in YouTube. So those are all the questions.
All right.
Scott says it's nice to see you.
Okay, and I will keep plugging along. Then here we go. So this is. As Jeff was saying, this is his favorite pattern. This is your best friend, a doji gap up, especially a doji gap up coming out of the oversold area. Now, for those of you who've seen my presentations before, the logic is the Japanese rice traders say if you see a candlestick buy signal in the oversold area, the probabilities are you have a reversal. If you see a candlestick buy signal in the overbought area, it doesn't mean very much. The T line is the 8 exponential moving average. And I tell people, just put it on your chart, see if it works. And that's the nice thing about candlestick analysis, because the number one criteria for candlestick analysis is the signals and patterns themselves. Everything else is a confirming indicator. What is the T line? Again, it's the 8 exponential moving average. It acts like a Fibonacci characteristic, natural support and resistance level of human nature. Is this being recorded? Yes, this is being recorded. So this is what Zine did today. There was your buy signal, your best friend signal. The reason we call it your best friend signal is just think of the logic that's built into these signals. If this is a bunch of indecision here, little doji type days, when they gap it up, they've told you they've made a major decision, a major bullish decision. How long do you hold on to this one? As long as you don't see a sell signal to close below the T line. What do you do with this? Well, when they start moving parabolically, look how far away you are from the T line. That's when you start looking to take profits. Here's another one. There's a wee little best friend signal on TLRY. Jeff, you might have been lucky not to get in today. There was the start of the uptrend. And also take a look what was happening. You had kind of a fry pan bottom, J-hook type pattern, staying above the T line, and then it did a little gap up. That's what started the uptrend. However, look what happened today. That's a hanging man signal, and look how far away you are from the T line, and you're in the overbought area. So what do we know about the hanging man? It's a candlestick sell signal. If this opened lower tomorrow, you probably want to start taking profits. Do you need to watch charts all day, every minute to act on these? No. Ron, you could be looking at this at night and then say, well, if this opens positive tomorrow, I don't know what the numbers were down here, but if it, let's say it closed at 12, if it trades above 12.25, I want to put a buy stop because that's can be confirming. So obviously, the more you're sitting watching, the better you can trade as far as short-term trading. But this candlestick signals work just as well on the 1 minute, 5 minute, 10-minute combination as they do on the weekly or daily, weekly, and monthly combination. It all depends on what your time frame is. The definition of a candlestick signal, it is the graphic depiction of everybody buying and selling during a specific time frame. Doesn't matter whether that time frame is 1 minute or 1 month. They all look exactly the same. This could be a, well, it wouldn't be a intraday chart because of all the gaps, but this could be a daily chart, a weekly chart, or a monthly chart. Works for Canadian securities. That's the nice thing about Metastock. They've got feeds for all stocks, whether you're trading European stocks, Asian stocks, Canadian stocks, and candlesticks work for all, anything that has fear and greed in it, whether you're trading stocks, bonds, commodities, currencies, tulip bulbs. Candlestick signals are merely the graphic depiction of what's going on in investor sentiment. Okay, I think
It seems to be a good time to bug you, if you don't mind.
No problem at all.
We did have a question come in from Michael. He wanted to know what RARE was.
RARE,
R-A-R-E.
just it means research, analysis, reverse engineering. So instead of where I used to tout that you don't need to know what's going on as far as the fundamentals because that's already built into the chart, that people that were analyzing the fundamentals are making their decisions. Well, now we've reversed that to where if we see a breakout, I'll try to find a better chart, but if we saw this breakout right here, or this breakout right here, we'll immediately go back and see if there's any news and research what that news might tell us. So now instead of saying, no, you can just rely on the chart itself to tell you something's happening. There's a few things that will make a price move. You could have an analyst upgrade a stock and it pops. Well, that's not a major investment change. That's just a quick supply and demand difference. But if somebody comes out and says, we've just developed a lithium battery that would now go 800 miles on a charge, well, that's probably going to put them in the limelight for the next 2, 3, 5 months. So what we're doing is reverse engineering. If we see a breakout, we want to see, especially in a strong sector like the biotechs or the electric vehicle area, we want to see immediately if that information that has just been announced is going to be a longer term effect. Now, longer term effect could mean, in my case, 2 weeks or 2 months. And we are working right now on indicators that would show whether something is going to be something that you want to hold long term. And again, in my case, long term is probably 3 to 6 months or longer. Now I forgot what the question was.
It was to talk about what RARE was.
Oh, okay. So
I think you got it.
Yep. Reverse analysis. No, sorry. Research analysis, reverse engineering, which is why is the price moving now? So we're using the charts to identify when something new has come into a stock, or especially a stock in a sector where technology can move it pretty fast. So we've got 2 elements of strong sectors. One the electric vehicle has probably got big, huge growth to it over the next 3 to 5 years. We want to figure out which ones are going to be in the forefront. And then you've got biotechs, which obviously the biotech sector is strong based upon what each individual company has come up as far as getting approval on whatever product they're trying to put on the market. There's a question for you there, Jeff.
Yeah. I was actually typing an answer. Daniel asked, are Steve's add-ons a one-time fee or a monthly, yearly fee? And if you own Metastock, you can actually get the add-on. We're going to show it a little bit later today. It's only $399, and that's one time. And we back it with a money-back guarantee. So yes, I'll talk a little bit more about that, though, Daniel. Thank you for the interest in it.
All right, so this is what we call 2+2 analysis. There's our little best friend signal. What else did it tell us? It told us the T-line was going to act as support. And it told us they were breaking out through this level. And it told us we've got what we call a classic pattern. A classic pattern is we expect coming out of a fry pan bottom a very strong price move. But we call it the classic pattern because the J-hook pattern has to have a strong price move when it consolidates. And then once it is done consolidating, which we can identify using the T-line, we know the magnitude of this move right here is usually the magnitude of this move right here. So we call it a classic pattern because after a fry pan bottom, usually you get a J-hook pattern. So there was the buy signal right here. And this is what it did yesterday. And it opened up at $30 today. We started taking profits. Why? Because look how far at $30 up here, look how far away it was from the T-line. So not only does the charts tell you when to get into a situation, but it also tells you when to take profits. And again, everything you see on a candlestick chart is based upon common sense. There's nothing magical built into this. It's just how human nature works the same way time after time. So we also bought this one. Again, 2+2. There was our wave one. Notice how when it pulled back, it was very indecisive right here at the T-line. There was our breakout. So what was our entry? If it opened positive, what was it telling us? This level was not acting as a resistance anymore. And today it was up even a little bit more. So this is just taking the information that we know as far as what are good buy signals or buy setups. The more we can put into our analysis, this is what we call the McMuffin pattern. A morning star signal is a down day, a day of indecision, and the third day closes more than halfway up this candle. A morning star signal is one of your 12 major signals. And when I say 12 major signals, for those that aren't familiar with candlesticks, there's about 50 or 60 signals, but you don't have to learn them all. Just learn the 12 major signals, 6 longs and 6 shorts, and you will have more trades than you'll ever be able to handle. Plus, the 12 major signals are the ones that are going to provide the strongest trades for you. That was on, was our double doji? Oh, I don't know. Can I get back there? Previous. Yeah, kind of your double doji. A double doji is another signal pattern. They come up, they consolidate, they consolidate. But what does the nature of a doji tell us? It's indecisive. So the consolidation is indecisive, telling you there's not a change of investor sentiment. If it opens positive the next day, you can be buying immediately because that tells you the consolidation's over. They're still taking it up. So back to the McMuffin. So one of your 12 major signals is the Morningstar signal. And then this is the doji sandwich. Again, a big day, a doji, and then they open up positive. That day is about the same as that day right there. We know what the results of a Morningstar signal is. Probably more upside. We know what the result of a doji sandwich is. More upside. When you combine the two, basically, you've got a morning sandwich or the McMuffin. It's just a double guarantee that you're probably going to be in an uptrend. Now, when you apply that information to what you're looking at right here, you've got kind of a wedge type breakout. Again, that puts you in situations where the probabilities of being in the right trade at the right time is extremely strong. Morning star signal. Then a doji. If it opened positive, I think it did open positive today, doing a doji sandwich. And what else would it be telling us? That the T line was acting as support. You probably have a J hook pattern set up. I think I did this one yesterday. I meant to see what it did today. LQDA. There's your McMuffin. Morningstar signal followed by a doji sandwich. And there's your flat handle. And there's your scoop. There's your slingshot effect. And look where the doji bottomed out, right about the same level the bullish harami over here bottomed out. So you have a double bottom, McMuffin telling you there's more upside, and a breakout of your scoop pattern. That just puts you in a situation where the probabilities now are going to be pretty strong. I didn't see what this one did today, but I think it held up pretty well. And that's another aspect of candlestick patterns, is it's not merely an uptrend in an uptrending market. Usually the probabilities are extremely strong it's going to move in this direction, number one. Number two, the magnitude of the move is usually going to be much stronger than just merely an uptrending stock in an uptrending market. And number three, if the market turns against everybody or goes south and you're in a bullish pattern, usually it takes an extra day or so for it to disseminate that bullish investor sentiment. Gives you an extra day to come out with a reasonably good profit. So again, 2 plus 2. There was a bullish harami, doji bullish signal, close above the T line, bounced off the 50, got a scoop pattern, and then your doji sandwich at the breakout level. High probabilities are heading higher. It is easy to find trades from 900 securities. No, it's even easier to find good trades, and that's why Metastock's got such a good scanning process. I tell people every single day there's 9,500 trading entities out there that in a matter of minutes you're going to find the best trade setups, the best patterns. So it takes the length of time, I mean, down to like 7. If you don't know what you're doing, maybe it takes 20 minutes. Once you start recognizing the patterns and the signals, it may take 7 to 10 minutes to find the best trades. I use the J hook to do scans in Metastock, but is there a scan for the best friend? Yes, there should be. I think we've got it in there. And the McMuffin, I don't know.
We do.
Okay, do we have one for the McMuffin?
Yeah, I actually run the Doji Best Friend every day. It's like Doji Dynamite is the one you want to look for, but I'll actually show that at the end.
Okay, let's do that. All right. So this is where you observe the obvious. 2 plus 2. Notice that it's supported right smack dab on the T line. Now, when I say right smack dab on the T line, that's relevant because nobody has the T line on their charts. So it's not pulling back to a level that everybody's watching, like the 50 or the 200. It's pulling back to what we know is the natural support and resistance level of human nature. So when we see it starting to curl back up, look where your breakout level is. And look what happened. A doji, if it starts trading positive, what do you have? A doji sandwich, J hook pattern breakout. That doji sandwich is probably going to be a good probability that this candle right here is going to be the same as this candle right here, which tells us we've broken out through this level. Get ready for wave 3. So I keep telling people this is not rocket science. Human nature works the same way time after time. All we've done is taken what the Japanese rice traders have illustrated to us for hundreds of years and just learning it. That's all it is. And it goes back to that basic statement that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And all we're doing is seeing the graphic depiction of what investor sentiment is telling us. 2 plus 2 means if you've got more than one indicator, like you can see the J-hook pattern, you can see that it held up at the T line, you can see that it's got a doji sandwich breakout. You've got more than just one indicator or one reason to be buying. You've got basically 2 plus 2 tells you there's going to be a much bigger number, just kind of using that as a phrase. So we recommended CVLB this morning. Now, what I do is I put out 2 or 3 stock picks every night, and we do it in a 2-minute video, but it's not so that you just have stock picks, that you understand what the rationale was for that stock pick. So look at our setup here. There was a fry pan bottom, wave 1, pulled back, couldn't close below the T line, and then it did a doji up here right at the same high. And what's our doji rule? It's going to move in the direction of how they open after a doji. So if it opened positive, what do we got going on? A doji sandwich telling us wave 3 is in progress. The J hook is right here. You have an up move, and then you do a little J hook. And so the mechanical or the measuring device of a J hook is wave 1 and wave 3 will be approximately the same. Now, that's just a general statement, but it works out pretty well that if you see wave 1, wave 2, the J hook, wave 3, at least we know what our target is. And at least we know we're probably heading in the right direction. Now, will wave 3 be the same as wave 1? That's what our projection is. But what is our criteria for coming out of a trade? A candlestick sell signal. Everything else is just a confirming analysis, but the signal itself is what tells you what's going on in investor sentiment. So when we recommended buying on positive trading today, it was on the basis that if we saw a doji sandwich, we knew that we were in wave 3. And this is what we call a bobble breakout. I already did this. So let's see. A bobble breakout is your J-hook pattern, but more defined. Look at the 200-day moving average. Now we can see the T line, which nobody else has. Notice the doji sandwich right here that started your uptrend. So a bobble breakout is just a more defined J-hook pattern. It basically says everybody that was watching this uptrend, look at our sell signal when it hit the 200 in the overbought area. That's when you were taking profits. Now we're looking to see when to get back in. Where do you think everybody else is watching? To see what's happening at the 200-day moving average. We've got a head start. We can see what was happening right here at the T line to tell us we could either be buying here or we wanted to be buying as soon as it broke out, because what's everybody else watching? They're seeing whether this is going to act as a resistance level. We're buying here, and they're all buying here because they realize that it's broken out. What time frame are the bars? These are daily charts, but they could be a 10-minute chart. They could be a 5-minute chart, a 1-minute chart. It all depends on the time frame. I used to trade the E-minis on a 1-minute, 3-minute, 10-minute combination. Did I just lose a feed? Ooh, I don't know.
We do, Steve?
Yep.
We do have a question out of YouTube that I promised Tom Jones I'd ask.
Okay.
If a position is going to close below the T line, are you going to sell that position before the close or at the open in the next morning?
Two different factors. If I'm too far away from the T line and I start seeing a sell signal, I'm going to close it out before it closes below the T line. Again, the further away you move from the T line, the higher the probability it's going to move back to the T line. So if I see a sell signal, and this is probably not the best chart to illustrate, but let's say, for example, when it hit up here and I saw it trading back below the halfway point of this candle the next day, I might have closed it out, because what would it tell us? It told us they failed up here. Now, if this has been hugging the T-line and it closed right here and then started trading down below the T-line the next day, that's also going to be a function of, is the market closing below the T-line? Or I'm sorry, is the market selling off and everything's selling off? Yeah, if I see a sell signal and it starts trading below the T-line, I'll close it out. But if the market is trending up and this was trending up, and let's say during the day it came back down here, I'm waiting to the end of the day because I'm thinking where this pattern should be in place. So it's less subjective than what I've just made it sound to be. You can tell whether it's staying above the T-line, and you can tell when it's starting to move too far away from the T-line. Is the T-line an 8 exponential moving average? Yes. Yep.
One more question from YouTube. Alpha wants to know, does this strategy work in consolidation also?
Well, the consolidation will tell you what's happening. I mean, the charts will tell you what's happening. You'll see the consolidation. So it's not like, well, work in consolidation. It's going to tell you when there is consolidation. So there's a lot of times when you're in the overbought area and you start seeing things move sideways. Now your rationale becomes, is this the best place to have my money? Should I take profits and then wait for the next pattern or the next bullish signal? So that's a question on, when do you start taking profits? And there's a couple different factors that play into that. And we do a session in our members area where we go through and say, all right, here are the different elements that we look for starting to take profits. Obviously, number one is the sell signal itself. Number two, how far away you are from the T-line. And number three, is there a confirmation of, if you're that far away from the T-line, is it probably coming back down to the T-line? Let's take profits and then wait to see what it does when it gets back down to the T-line. But that's a very easy visual analysis that we do in like a 40-minute training. And it's just, again, logic. Now, see if I can find stuff in here as we go along. So I hope that answered the question. But remember, the candlestick buy signals, there's 6 of them, and there's candlestick sell signals. And they all work effectively if they're in the right conditions of their trend. So again, obviously a candlestick buy signal isn't a signal if it's in the overbought area, or a candlestick sell signal is not a signal if it's in the oversold area. It's when you see a candlestick sell signal in the overbought area that you start deciding to take profits. What is the chart on the bottom? That's stochastics. And my stochastics are 1233. So very simple. If you see a candlestick buy signal with stochastics in the oversold area, the probability is you're heading up. If you see a candlestick sell signal in the overbought area, probabilities are it's changing. Now, there's a different relevancy to the stochastics if you're on a pattern. A pattern breakout is usually going to occur when the stochastics are already up in the overbought area. Oh, yeah, I don't know. I haven't figured out a joke. I'll try to figure out one by the end. So these are high probability, even if you're an option trader as well as a stock trader, that if I'm seeing this type of thing, I'm starting to buy calls here knowing that the pattern breakout has a lot more to the upside. As a matter of fact, this is why I have this one up here. We recommended buying the calls and the spreads on Overstock a couple of days ago. So that one has been working out nicely. So remember the doji rule, very simple. The price is usually going to move in the direction of how they open after a doji. So if you see a bunch of dojis, and then especially sitting on a level that everybody else is watching, that tells you there's a lot of indecision down here in the oversold area. What do we start looking for? A buy signal. So you got doji, doji, doji off the 50. then bullish confirmation, closing back up above the T line. What's our next move? We can be buying on the positive trading the next day because the probabilities are pretty strong that the bulls have taken control. Do you use RSI? I don't, but there's nothing keeping you from using RSI. Basically, anything that improves your ability to analyze what's happening in a price move, go ahead and use it. Now, as you can see, I don't have a whole lot of on my chart because this is my top criteria, is the signals themselves. Everything else becomes a confirming indicator. Slow stochastics. And again, they don't have to be that specific. All we're doing is saying we want to see buy signals down here. A lot of people say, well, do you trade the cross of stochastics? No, we're not trading stochastics. We're trading the signals and finding out where they are in the trend. So here's one of your strongest of the 12 major signals, the kicker signals. This is what we call a bullish flutter kicker signal. Hard to see, but this day was a dark day. Opened here, closed here, dark candle. The next day, they gapped up and did a doji at or above the previous day's open. And what's our doji rule? If it opens positive, it's going to trade positive. So if it starts trading positive, we call this a bullish flutter kicker signal, which is a kicker signal with this little flutter. If we pulled that out, you essentially have a kicker signal, which is your strongest signal. And what do we have as far as expectations from a kicker signal? That's your expectation, a very strong price move. That was 1233 on stochastics, yes. And that's nothing set in stone. I just sat one night, probably, I hate to think of how many decades ago, and I just tweaked. The normal back then was 14.55, but that seemed a little bit too slow for my swing trading. So I sat there one night and I tried 14.31, 12.55, 12.35, 12.53, and just came up with 12.33, and that's worked extremely well for me through the years. So nothing set in stone. What I was looking for is, when do I see buy signals in the oversold area, or when I could just go back and take a chart and kind of correlate it to when the bottom correlated with the bottom in the stochastics and the top correlated with the top of the stochastics. So this is, again, we recommended this one, or people in the chat room got this one because there was a dark candle, they gapped it up and then opened up positive. There's your bullish flutter kicker. If you took out this little flutter, you basically have a kicker signal. And the 2+2 was, look where this bounced, right off the 50-day moving average, back up above the T line through this level. And so this one, all you do is you stay long as you don't see a sell signal and a close back below the T line. That simple doji rule and the simple T line rule is what takes all the anxiety out of holding positions. I used to get out of a position because that was a sell signal and I better take profits. Well, I just discovered that as long as it doesn't close below the T line, I just sit and wait to see what happens. The probabilities, again, are extremely strong that as long as you trade above the T line, you're still in an uptrend. This was another one. This is what we call a trend kicker. Notice again how we did a doji gap up, but it did a dark day. The next day they closed kind of indecisively right back above the open. What did that tell us? That told us there was still lots of strong movement in this, or strong bullish sentiment. And what type of pattern? Look at our kind of our fry pan bottom. What started the uptrend? There's another little kicker type signal that told you the selling had stopped and the buying had started. This one has made us a lot of money. Look at the little trend kicker right here. And look at the trend kicker right here. Open up here, closed here. Then they opened it positive almost at the open and went this direction. J-hook pattern. Again, it's just telling us the strength of the investor sentiment is still very strong in our favor. Vero is another one. You could see the fry pan bottom. They took it up, profit taking. But the next day when they gapped it up above the previous day's open, what did that tell us? That bullish strength was still there. You wanted to be in it. And this one today, again, look at your bobble breakout, kind of a J-hook pattern. Use the 200 as resistance. And look what happened right here. You got a doji gap up, kind of your best friend through the resistance level, creating kind of a fry pan bottom J-hook pattern. And this is what it did today. So I'm pointing all this out not because I don't have any idea what NTEC does. I think it's a biotech. But all it's telling me is they're buying this one, and it's breaking all our or using all our indicators to tell us when we should be in these. So this is where, if I was going to hold this for a longer term, I'd go back to our rare research analysis, or research analysis reverse engineering, and see what made that price move up the way it did. So that's about all I got. And the reason I was showing this is because people, and my most severest critic, my brother, he's never listened to me for a long time, but his account has just blossomed nicely ever since March of last year, because we're in the right sectors at the right time. He's been in the electric vehicle sector. We've been in biotechs. And as a matter of fact, I've been touting people to not only themselves learn how to use candlestick analysis, but teach their kids how to use it, because it's all common sense. It's not the rhetoric that Wall Street had put out for years, that you just buy good quality companies and hold them long term and you'll make a lot of money. Well, it's great if you've got time to sit around for years. But I had one guy email me over the weekend saying he finally taught his kid, and his kid, 14 years old, loves candlesticks, and he's up 44% for the year. So again, this is not rocket science. This is just analyzing what human nature does time after time. We are going to be doing a mini session in a couple of weeks. If they're called spotlight sessions. They usually last for about 90 minutes on a Saturday, but we concentrate on one topic, and that topic is the what we call the power trades, things that you're seeing here, how you set up for each one of them. I thought I put some more charts on here, and apparently I didn't. So I'll give you a couple symbols to watch, or at least one. MP is they're in rare earth, which I'm guessing lithium is part of that. They did a doji today right at a breakout level of a fry pan bottom. So you might want to look at that on a positive open tomorrow. So with that, can you summarize the pattern or bullish flutter kicker and the 2+2? Okay, let me go backwards. Are we on any time constraint, Jeff? Other than you having to get to.
But while you get to the slide you're looking at, I did look up a dad joke for you.
Okay.
Are you ready?
Yep, I'm ready.
Why could the bicycle not stand up by itself?
Got me.
It was too tired.
Ha. All right. I always use the one. What is a pirate's favorite ocean? The Arctic Ocean. So I've got to learn these things for my grandkids.
My daughter.
Go ahead.
I was going to say my daughter could do a master class. She brings them home.
All right. I'm trying to find a bullish flutter kicker previous previous. So while I'm doing that, if anybody else has questions, I know which one is it. Where it was hymns. Look at your down day. Then the next day they gap up above the previous day's open and do a doji. Well, we know the doji rule. The doji rule is very simple. They're going to move the price usually in the direction of how they open after a doji. So you can say they opened up positive, so that was a good indication they were going to trade at positive. That becomes a bullish flutter kicker, because if you took out this little flutter, you've got a kicker signal. It was opened here, closed here, then opened this direction and went positive. Was the same thing that happened right here. Opened here, gapped up, did a doji and went positive. That was a bullish flutter kicker that usually starts this type of price move. Okay, Bill, I will probably repeat that one in the future. 2 plus 2 is nothing more than, if you can take a look at a chart pattern. Let me see if I can find one. If you can take a look at a chart pattern, say, all right, I've got a little J hook pattern. I've got a fry pan bottom. I've got a resistance level. If they open this positive, what's it telling me about this level? They're breaking out. So it's not just saying, all right, I see a buy signal, I'm going to buy. I can see a potential buy signal breakout. I can see the pattern. I can see the resistance level. It's adding a bunch of factors in that dramatically improve the probabilities of being in the right place at the right time. So that first chart that I showed you on OCGN, that first breakout move was nothing more than telling us there's a change of investor sentiment, which is exactly what the graphics, the candlesticks illustrate for us. That's what's going on in investor sentiment. So do we always hit something like that? No, I just happened to, on that day, my brother's asking me, well, what tells us when a breakout's occurring? And I said, well, I can do this. And we found that one. And I said, so that's a breakout. There's something new happening. And as I was talking, he just automatically bought shares. And so we followed it. And obviously he got in at 73 cents and he got out at an average around $16. So it made his account very happy. But that was not to say, oh, we're big, we can find the big ones. All we're doing is identifying where the probabilities are greatly in our favor. Does every price move go up like this? No, but at least we're looking for something that might even go up like this. So we're improving our probabilities of, one, being in the right place at the right time, and two, hopefully the magnitude of the move is much, much greater. The definition of a doji is where it opens and closes at about the same level. It looks like a little cross. That tells you there's indecision between the bulls and the bears. All right, that's about all I got. Are there any other questions? So yeah. I think Jeff is going to come in and show how to do some of the scanning, which is, again, Metastock's got probably one of your best scanning software setups. So that's why I like to do this, so that he can show how you can find all our signals and patterns. Go ahead, Jeff. What were you going to say?
I was going to say, I promised our friend Tom Jones on YouTube that we would look at LUC today. He said at the very top of the hour, he was actually asking to look at LAC. So I pulled up a chart. Okay. Happens to have a little bit of a pattern today. And I just was wondering if you could give us like a non-recommendation opinion of what you'd be looking for this stock to do.
Well, we were in this one earlier. And again, this is where it broke out. We'd been in this one. And then this is the warning right here. Notice how it gapped up.
Right here? Okay.
Yep. In the overbought condition. So if you just go back to the simple philosophy of the Japanese rice traders, where do most people buy? Oh, you couldn't see I had my cursor on there.
No.
But we bought down here back where across the 50. you could see there was a little best friend signal that took it up through there, and it stayed long as you stayed above the T line. But the warning came when it gapped up there at the top. And again,
Right.
what do the Japanese racers say? Most people buy exuberantly at the top. Now, in the old days, before candlesticks came along, and I happened to be in a profitable trade, which was rare, but if I was owning that, I'm thinking, oh man, I'm going to get rich. This one's going to skyrocket, instead of realizing, oh, this is where the exuberance is coming in. Start taking some profits. Now, one of the methods of take your arrow up toward the top of that that trading. When you're that far away from the T line, there's a very simple process for starting to take profits. First of all, the alert is you're that far away from the T line. So secondly, when you know that and you're in the overbought area, you flip to your 10-minute chart. And when the 10-minute chart starts showing a sell signal and closing back below the 10-minute T line, that's when you start taking profits. Let's see, is that going to be on the same day? It looks like
know.
Yes, it almost looks like it because that was a gap up. So
yeah, I think it was right here. Yeah.
Yep. So you would start taking profits up there. No, that wasn't it. That was but anyways, so everything built into a candlestick chart is common sense. And there's very simple methods for when it's overbought and you want to know when to take profits. That's the big problem most people have, is they know how to get in, they just don't know how to get out. Well, candlestick signals have very simple and logical processes for getting you out pretty close to the top. And again, the warning was that when they start gapping it up in the overbought condition, you start closing out. Now, today's trading is what we call a bearish left-right combo. Oh, you already have that on there. That's a bearish engulfing following a doji. Now remember, a doji tells you there's indecision. Also, whenever you see a doji in a combination signal, that signal is usually going to be a little bit more powerful. So if I had been long today, or if I had bought on the positive trading, what color would the candle have been as soon as it came back down through the open? It was starting to turn dark. And what's that tell us? The bears were in control. So there's a lot of times, and I say numerous times, probably 30% of my trades is that if I bought that on positive trading and I was happier than a pig in doo-doo as it was going up, as soon as it came back down through the open, remember, where it opened was telling us where the bulls were starting to take control. If they came back down through the open, the probabilities are telling us the bears are back in control, close it out. Now, that is the process of what everybody tells you to do, of cut your losses short and let your profits run, but they never tell you how to cut your losses short and let your profits run. Candlesticks does that very simply for you, tells you when to get out of a bad trade. So I know that approximately 1/3 of my trades might not work, so I'm prepared for that. So that takes the mental emotion out of my trading. But if I see something not working, it's not because, boy, did I analyze this wrong and I'm stupid. Oh, there it is. Okay. I just tell myself, whoops, that one didn't work. Let's close it out and move on to something better.
Okay, I thought we might want to mention this before we kind of go into the session demo, but we've done a lot of really good trainings with Steve, and he was talking a little bit about a Saturday session where they go in and kind of look at profitable trades. That's the way you were defining it a little bit earlier, right, Steve?
Right. Yep.
Okay. Yep. So it's only $47. It's February 20th. I believe that's not this Saturday, but the following Saturday. And Correct. You can sign up at stephenbigelow.com/identify-power-trade. And I've put that in the chat for GoToWebinar. I'm going to ask Greg to go ahead and put that in the YouTube chat. So stephenbigelow.com/identify-power-trade.
All right, thank you. And let me do one more thing before you go into the. Yeah, I want to see the charts too, that you're doing. But the rare program that we've put together is not something that I'm putting out. It's available to everybody in the in our chat room. So what that tells us, or what that does for us, is we've got over 200 sets of eyes looking for the same thing. So if something breaks out, everybody can be alerted to it by somebody saying, "Oh, look at XYZ. It's breaking out." And somebody else will say, "I just looked at the news and they have done this or that." So now we can evaluate it right away whether we should be buying it or whether it's just going to be a quick pop. So today, Jeff, if you could bring up a chart on AYRO. See how that one broke out? Yeah, that's it. And over there on the very right, it broke out. Now, the problem with this one today is it broke out right as this fry pan bottom was where it should be breaking out, but we couldn't find any news on it. So that means we want to start watching to see what they do with this tomorrow. So let me go with one more and let you do it. If you bring up OCGN again.
Okay, I'm trying. It wasn't popping up, GN. Okay. Yeah. Here it comes.
Okay, so here's the common sense one that says, all right, where should you have been taking profits? Well, obviously way up there at the top. Look how far away you were from the T-line. And it was just going gangbusters. But as soon as it came back down through the 10-minute T-line, we started taking profits. But if you didn't, look what happened the next day. There was your bearish Harami doji. And now, first of all, you got a bearish Harami, which tells you the buying has stopped. And you have a doji. And what's our doji rule? The price is usually going to move in the direction of how they open it after a doji. So even if you didn't close it yesterday, when it opened lower today, you closed it out immediately, because where do you think the first target's going to be? You're probably going to bring it back down to test the T-line. That doesn't mean we take this off our charts. We just put it on our watch list and see, once it hits the T-line, does it do a J-hook type pattern? We can always buy back in. What is a good resource for candles? Eric, I get good reviews on, I've written 3 books on candlesticks. High Profit Candlestick Patterns is probably the meaty one that you want to read. It'll show you the strong signals and the strong patterns. What about using your 3T line when you get overextended, the 3T line becomes more effective. And you could also use the 3T line for a confirming indicator, that if you see a buy signal and the 3T line comes up through the T line, that's an added confirmation that the bulls have taken control. On the 10-minute chart, the T line is a trailing stop. Kind of, yes, Bill. All right, go ahead, Jeff.
All right. Thank you, Steve. I appreciate that. Okay, and great job. I really appreciate all the time you spend with us when you come in. I actually jotted down a couple of symbols I'm going to look at tomorrow, so appreciate that too. In any case, as you can kind of see with kind of the charts we've been pulling off, we've designed an add-on that I'm going to talk a little bit about. We've had a lot of questions that come in that talk strictly about how do I scan for things, how do I find these patterns, and that's one of the things I love about Metastock in particular. And I want to give a little bit of background as we talk a little bit about the session and kind of the add-on itself. We developed the Candlestick Pattern systems. I believe we released it about 8 years ago. It's been extremely popular. It's been one of the most popular modern add-ons that we've had. And it's one that I use very, very regularly. I particularly love somebody who's asking about how to find like the Doji best friends. I'm going to show you how to do that. But what we did with Steve is we sat down with William and we kind of developed the coding and the methodologies for finding like the J hooks and basically a lot of the different patterns. Here's a list of the different patterns that are on there. So you've got the fry pan, you've got the dumpling tops, you've got the D-line, you've got the scoop. All of these are already included in the actual product themselves. And we've also added quite a few new ones as well as part of 2.0. In the program, basically, if we're basically talking about the software itself, it does have the ability to do what we call an exploration, and it has an expert advisor. And I'm just going to show you how a scan works in Metastock. So I'm going to go ahead and to do that, we'll go ahead and open up Metastock right now. What we've got here is like our power console. And I'm just going to come down here. These are all different power tools that you can use. One of the most, they're all useful, but one of the ones I use on a very, very, very regular basis is the scanning. So I'm going to go ahead and click on Explore, the exploration. And I've actually set on the demo room computer the explorations that are included as part of this Candle Profit systems to the favorites. And if I just hover over any of these, it's going to actually tell us what you're scanning for. So if I check mark this one, it's going to be looking for Doji at top, Doji at the best friend, the muffin sandwich. I didn't name it McMuffin because I didn't want that to be in the product, but it is the same as the McMuffin or sandwich. You've got J hooks. I didn't want McDonald's knocking on the door, basically, is all that means. We do have like your single day patterns. All of these are different scans that you can run. So one of the ones I routinely run is the Doji Dynamite because that'll give me the Doji best friend patterns. And if we come down here, I can actually select what I want to scan. So one of the things is when I started working at Metastock like 20 something years ago, we were owned by Reuters. Reuters became Thomson Reuters. Thomson Reuters became Refinitiv. And we still have a really good relationship with Refinitiv, even though we bought ourselves back from them a number of years ago. But one of the things that's an advantage is to us about having a partnership with Refinitiv is the wealth of their data. They're basically a Bloomberg competitor, I guess, is a good, quick way to define it. And they have data that basically spans the globe. I mean, we have in Metastock, if you're up in Canada, I know Tom is up in Canada, and we have a number of people from Canada. You might be in India. We have a number of customers in India, Australia, London, you name it. But one of the things that's been an advantage to us is we have over 200 exchanges that are in here. So if you want to scan futures or ETFs or international markets or US markets, you're going to have the data. And one of the things that I think that we've done a pretty good job of is kind of organizing that data in a way that you can find it. So if you look right here, we've got 288,000 symbols I could scan right now. And obviously, I'm not going to want to scan 288,000 symbols. But if I'm here in North America, which I am, I can actually come in here. And I can kind of say, okay, well, I'm going to drill into North America. If I wanted to, I could scan all the ETFs. I did run a scan of all the optional stocks, but I could also scan for Toronto, TSX. I could even look for Canadian ETFs if I wanted to. Whatever I want to find, I'm going to be able to most likely find it. There's been some exchanges that over 20 years we haven't been able to add. The only one I can think of is like the Jamaican Stock Exchange, but everything else we pretty much have access to. Okay, so all I did is I came in here as we were getting ready to do the webinar today. I said I want to scan all these Doji Dynamite patterns. I want to do it against all of the optionables, and I just click on the Start Exploration. It just runs through all of them. It doesn't take very long. I'm going to say it's going to take to run like all of the optionable stocks. I think it would probably, as a rough guess, and obviously it depends on your internet connection, it'll take about 4 or 5 minutes. Since I don't want to spend 4 or 5 minutes trying to entertain you while we run the scan, I've already run it. So what I'm going to do is I'm actually going to go ahead, and out of those 4,500, I'm going to go to the report here, and it's just going to give us a list of the 75 that have any of those patterns. So right here, we've got the Doji at the top. We've got the Doji best friends right here. We've got left, right bullish, left, right bearish, series of bullish. There's your Doji sandwich, your BD sandwich, and your muffin. And the trick with reading this, you have a stochastic value and a close. The trick for reading this is it's either a true or a false. So if it's true for that particular day, you'll see there's a little 1, meaning if I opened up Akamai Technologies, it's going to have a doji at the top today. I'm going to sort it for my doji best friends, and you'll be able to see that out of like all the ones that I scanned today, out of the 4,300 or so stocks, if I'm just looking for doji best friends, there's about maybe, I'm going to say about a dozen right here that I can look at. So instead of looking at 4,800 different stocks, I can look at the 12 that actually have the pattern that I'm interested in, and it's going to give it to me. If you're looking for muffins, as I can't remember the gal that was asking for it earlier, but if I'm looking for muffins, I can actually see if there's any. And as of today, I don't see any muffins that actually came in. So we'll go ahead and go back to the doji best friend. The very first one was AMC Network. And then you'll notice that basically there's about 12. And I can open up I can open these up in a quote list. I can save them off if I want to, or I could just open the chart. And just to kind of keep things simple right now, all I'm going to do is just going to highlight this AMC Network. I'm going to go ahead and click on Open Chart. And just kind of show you how everything looks like on the chart for you. The first thing I'm going to do, though, is I'm going to attach the template that applies all of Steve's indicators on here. So what I'm going to do is just come in here. The template that I'm looking for is basically CPS Bigelow. There's a few different options. There's the chart view. There's slightly different moving averages if you use it with futures. And there's one that I added just because I like to look at them with volume, that's just called with volume. So, but here's a CPS Bigelow chart view. I'm going to apply that to the chart, and that's going to add all of the moving averages, the 3T line, the T line. I think it's a 20, and if I hover over it, it's a 20 simple, a 50 simple, and a 200 simple. Somebody was asking to go through the moving averages again. There you go. But you'll notice as soon as I apply that to a chart, I'm going to have all of the patterns that we're recognizing. Since I scanned this, it did have that doji followed by a gap up. You can see that here. You've got an engulfing bearish pattern that's labeled and identified. Any of those patterns that are identified on the chart are going to just show up on the chart for you. The other thing that I'm going to show you real quick is how you can kind of look at it and get kind of a breakdown on what maybe you don't know what a doji best friend is. I can come in here and go ahead and click on View Expert Commentary. I'm going to dock this over to, we'll just put it on this side for right now. Oh, or we'll put it on the bottom. That's okay. Doji is in the oversaw. So what we're looking at, a doji best friend here. Actually, I'm going to undock this. It's annoying me. I actually prefer it to be right here like this, or on the other side like this. So we're analyzing this day. I can move this back and forth, but today is a doji best friend. A doji best friend is a doji in the oversold condition followed by a gap up. So here you have your doji, had a little bit of a gap up. That was enough to give you a doji best friend pattern. And here it's just going to give you some advice on how to do that. Traders should be alert for this opportunity to get into a new long position. It's a gap up after a doji or a spinning top formation while the prices are in the oversold area of stochastics, preferably down below 20, which is what's happening here. Expect the strength of the uptrend to be greater if the last bar closed above the ADMA or the T line, which it barely did. So it's kind of giving you what you can expect. It's giving you advice in terms of what you should do. You could exit the trade if you close down below the ADMA, or if you trade back down below this doji signal. Those are both the exits. If I'm looking at maybe a dozen of them, because I just ran a scan, we put in there enhancements, which basically allows us to understand how we should evaluate different patterns. The further away the doji occurs below the 8 EMA, the higher the probability reversal happened. In this case, we're right on the EMA. Or if the day after the doji gapped up above the T line, which we did do that, then this would be an enhancement to that signal as well. So if we're trying to evaluate a dozen different patterns and we want a good way, we look for those different enhancements on the chart. So that in a nutshell is kind of the product. It's going to I'm going to go back to my PowerPoint right here real quick. It's going to identify all of these basic patterns for you. It's going to give you the commentary. It's going to tell you what they mean. It's going to give you the ability to scan for them. it's just such a great product for what it does. And as I had said earlier, it's going to include the 6 explorations, the expert advisor, 3 different layouts, and then the 36 different patterns, basically. And so what we're going to do here today, if you'd like to get it, we're going to give you a discount. It is a one-time cost. Normally, we charge $499 for Candle Profit Systems. We're going to give it to you at $399 today. We're going to back it with our money back guarantee, so you can take a look at it. If you like it, you can keep it. If it helps you find better trades, it's not going to have to help you find a lot of them at $400, but if it's going to help you find better trades, then you're going to keep it. We're going to include a copy of Metastock. So if you haven't heard about Metastock before, we're going to give you our real-time version free for a month to help you evaluate that as well. Metastock real-time, if you aren't familiar with it, has been rated #1 in its price category for something like 25, 26. I lose track. It's like when I want to know how many years I've been looking at working at Metastock, I look at my LinkedIn page, but 24, 25 years in a row, we've been rated #1 by the readers of Stocks and Commodities. So it's a great software program. It's backed by a great support team. And we're going to give you a free trial to it if you need it. We'll also give you some training to help you get started with Metastock called the Unleash the Power of Metastock. And if you're brand new to Metastock, we'll even help you install everything and walk you through everything with what we call our white glove installation. So again, $499 is the price of the add-on Candle Profit Systems. We're going to discount that down to $399. We're going to give you what you'd love in every trade, a no-risk proposition. It either helps you make money and you keep it, or it doesn't help you make money, you don't see a value in it, and you return it and get a refund. I don't think we could offer a better deal than that on it. You know, it is no risk, and we can stand by that. It's been a great rated software program. People love it. We have had a lot of people talking about how much they love Steve in the room today. So give us a call. We can help you get set up with that. It's 1-800-882-3040. You can chat online with one of the sales guys here at metastock.com/sales-chat. And you can also visit us at metastock.com/candlestick4MA. I'd encourage you to try it. I recommend it. I think it'll help you identify the better trades. And so with that being said, I want to say thank you to Steve for his time today. But in addition to that, for being a great business partner, a good friend, and to teaching me some good things about trading over the last decade. Really, Steve, I appreciate everything you've done for us. I want to say thanks for coming. I hope it was helpful for you. I hope you learned a little bit. Gordon has a question. Is Metastock RT $100 a month? It is, Gordon. Can you show what the Zenith market data looks like or includes? So basically, okay, let me talk a little bit about this, about what Zenith market data is. I don't have it loaded and ready to kind of show you, but for Zenith, they spent, let me just give you some numbers on it, because I could spend all day demoing it to you. Metastock, what we call Zenith, is basically a product that was designed by Thomson Reuters. They sold that product to Refinitiv, and so that's. But Thomson Reuters, at the time, they were developing a competitor to Bloomberg. It is a product that they invested more than $1 billion on, and it's something that that Refinitiv is still putting money into designing. It's a really good fundamental and news product. It's supported by something like, let me see, 3,000 different full-time reporters across 300 different global news providers. It's really like getting Bloomberg, or it's like getting a product, let's say, very similar to Bloomberg. So that's included as well. And we can send you, Gordon, I know that's kind of just like a very high level view. We can send you some videos. If you just get in touch with us at metastock.com/sales-chat, we can send you all kinds of information and product demos and things like that that we have built around Zenith. Okay. Michael says, what if we buy candlesticks, but we don't continue with Metastock? Do we get our money back? Well, that's why we're giving you a free trial. So if you buy the candlesticks and you don't want to continue with Metastock, you haven't paid anything for Metastock, unless you've paid for exchange fees, like New York Stock Exchange, NASDAQ, Amex, they all want a little bit of money if you want real-time data from them. It's like $350 each. The futures are a lot more expensive. The point is those exchange fees go straight to the exchanges and they're not refundable. But by definition, you won't pay anything for Metastock. So if you don't like it and you don't continue, you won't be out any. You can just cancel. Tam, I'm going to say it that way just because I'm afraid to pronounce it the whole way. Thanks, Metastock. I'd say, thanks, you're coming. Okay. And Gordon says, will do. Thanks. Okay. Thank you. If you guys need anything from me, feel free to reach out. My email address is just jeffrey.kibbe@metastock.com. Give us a call, 800-882-3040, metastock.com/sales chat. Thanks again, everybody. Steve, appreciate it. For all of you that watched, I hope you enjoyed it. I hope it was helpful. Stay healthy. I hope we're closer to the end of this COVID thing than we are to the beginning. But let's see you at the next one. And thanks for coming tonight.